The UK Budget October 2024. Key tax changes. The UK Budget of October 2024 has introduced several significant changes aimed at increasing government revenue and promoting fairness in the tax system. These changes are said to impact higher income individuals and those with substantial assets, altering the landscape of national insurance, income tax, capital gain tax, inheritance tax, pension tax, VAT on private school fees, and non-domicile tax system. Among the most notable changes is the increase in national insurance rate, which will rise from 13.8% to 15%. This adjustment is expected to generate an additional £25 billion, contributing significantly to the overall budget requirement of £40 billion. The income tax personal allowance threshold, which decides the amount of income that is tax-free, will remain frozen at £12,570 until 2028. This decision means that as wages rise with inflation, more individuals will fall into higher tax bracket, effectively increasing the tax burden on employees. While this measure is designed to increase revenue, it may also place additional financial pressure on many workers. Capital gain tax will see a substantial increase in rates, with the lower rate rising from 10% to 18% and the higher rate from 18% to 24%. These changes eliminate the previous difference of rate between capital gains from property and other assets, creating a more uniform tax approach. The increased rates are expected to generate substantial additional revenue through they may also discourage investment in certain capital assets. The inheritance tax nil rate threshold, which is the amount that can be passed on without incurring tax, will remain at £325,000 and will be frozen until 2030. This measure is intended to capture more estate within the tax net as property value and asset price rise. Unspent pension funds will now be subject to inheritance tax, adding another layer of taxation on inherited wealth. From January 2025, the VAT exemption currently enjoyed by private school will be removed. This means that fees for private education will be subject to VAT at the standard rate, increasing the cost of private schooling. This move is likely to generate additional revenue for the government, though it may also lead to higher education costs for families who choose private schooling. The non-domicile tax status, which has allowed individuals who live in the UK but are domiciled abroad to avoid certain UK taxes, will be abolished from April 2025. Starting April 6, 2025, a new residency-based tax system will be implemented, ensuring that individuals are taxed based on their residency status rather than their domicile status. This changes is aimed at closing a tax loophole and ensuring that all residents contribute fairly to the UK tax system. These changes collectively represent a significant shift in the UK tax policy with the aim of increasing revenue and promoting fair distribution of tax burden. By targeting higher income individuals and those with substantial assets, the government seeks to address inequalities within the tax system. In summary, the UK Budget of October 2024 introduced a comprehensive set of tax changes aimed at increasing revenue and promoting fairness. We have uploaded more than 1,000 videos on our YouTube channel covering topics related to UK startups, business and tax. Every Sunday, we provide a weekend update on our YouTube channel. Please watch it.